Isa, beautiful. Another $31,000 today. You got to be flipping my flapjacks. Man, I hope you're making some money out there in this market because it's a money maker. Look at some of these moves here today. We got to talk about, are some of these small cap moves sustainable? Fubo TV, 17% plus move here today on obviously the favorable ruling in regards to that lawsuit situation, right? SoFi up 6.5% here today. Cheesecake down up 3.5%. Tesla's having a good day. Zoom's having a good day. So we'll speak about if the small caps will continue to roll in this video. PayPal, it's a good sign when it's 11-11, baby. I love that. PayPal continues to roll. We'll speak about this one. We got to talk about what's going on here with PayPal. Palantir won't stop going up. It's an animal. We'll speak about Palantir in this video and kind of what my expectations are from here in regards to that one. Big news came out here today in regards to AMD, what this means for NVIDIA. Obviously, I just sold my NVIDIA stock this past week, right? AMD's going after NVIDIA with a $5 billion acquisition. That news just came out here today. So I want to speak about that, what it means for the future of NVIDIA. Is this something that could start negatively affecting their numbers over the next year or two? Is it further out? Those sorts of things, okay? And I also listened to Lisa Su's interview here today. Now, Estée Lauder, there's a stock I just started buying here. It's down, even though they reported earnings this morning. Very disappointing to see that stock down, considering that stock has just been going nothing but down. You'd figure, like, come on, at some point in time, this baby has to bounce, right? Nope, no bounce. It took a huge loss in the bottom line, and that freaked me out because all of a sudden I saw this massive loss in the bottom line. I was like, what is going on? You got to dig a little deeper. And I'm going to show you in this video toward the end exactly how to dive deeper into a company's financials and find out what's really going on in a situation like this, because I think that matters significantly. I got two questions for you. Dos questions. One, are you subscribed to the channel? We just hit a new all-time high subscribers in the history of the channel. Are you subscribed here? Check that out. And the second thing is, do you smash that like button? If you do, you're part of the minority. You're in the 10% of people that actually smash the thumbs up button for videos, man. And if you're not, then you should start smashing. That's all I'm going to say about that. Congratulations to one of our members of the private stock group. Absolutely amazing. They sent this over to Andre here today. They just hit over 1 million euros for the first time in their portfolio. Absolutely phenomenal to see. My wife had me sign these 5 this weekend. My wife's the one that sends out the 6 and 7 figure club awards to the members when they hit 6 figures, 7 figures plus in their portfolios. So signed up 5, so we just had 5 new folks hit 6 figures plus in portfolios. And it's a great time to see a lot of people setting new records in your portfolio, okay? If you're looking to join these folks, take your game up to a much higher level, click the pinned comment down there today, apply, join private group, get access to 1000X, and become a much better investor than where you're at here today, okay? So let's start out talking about some of these small cap stocks. Fubo, SoFi, Cheesecake, right? Can these stocks continue their upward trajectory? Obviously, Fubo is kind of a freak situation there because we have some very favorable outcomes here. We're about to go into football season. Remember, college football gets kicked off next week, right? And then about 2 weeks after that, then we're talking about NFL seasons here. That's always a boom for Fubo's business model. They start attracting a lot of new subscribers. So that, along with the whole positive ruling, the injunction, I mean, just phenomenal news in regards to Fubo. But what about these stocks in general, right? Well, listen, the Russell 2000, it's a roll tide situation here. I mean, this baby has been rolling and rolling and rolling. And as long as this Russell keeps rolling, these sorts of stocks are going to continue to fly. You know, SoFi, you'll see a $10 plus number on that one, right? Fubo, I mean, if Fubo comes out with a great next earnings, strong subscriber numbers, positive conference call, losses brought down a lot more, this stock will leave this year in the $3 to $4 range. This year. I'm not talking next year, I'm talking this year. But they gotta execute, right? The legal stuff got to continue to move in the right direction, as it's been doing, right? And then they got to come in with strong subscriber number, bring down those losses again this quarter, and you'll see 3 to 4 before we exit this year in regards to that one, right? So as long as this Russell keeps rolling, all these stocks are going to see a lot of momentum. Even like the Honest of the world will see a lot of momentum, right? The Russell's now up just in 10 months, 32% move on the Russell Wilson. Incredible. So there's 3 ways on how this keeps going. I don't know why I put 2 ways there, but it's supposed to be 3 ways on how this can continue as far as the Russell. One is the whole market goes risk on, right? Which is kind of what we saw today. The NASDAQ was up, Dow was up, S&P 500 up, the Russell up, everything was up, right? So if the whole market continues to go risk on here, which a lot of people are not expecting that because we're in August and September, usually bad months for the market, People get scared in October as well. So people are not expecting this market to continue to roll higher here, which kind of makes you think if people aren't expecting that, what's likely to happen? You know, the stock market is usually the opposite of what everybody's expecting is what ends up transpiring, right? So everybody's thinking like, there's no way this market can continue to roll up here. Like, no way, right? If the whole market keeps going risk on, then these small cap stocks will continue to fly a lot higher, and the Russell will as well, right? Now, keep in mind, in regards to these, the percentages might not be as big in the future. You might not get a FUBO up 17% a day or SoFi up 6.5% a day, right? But as the stock prices get higher and higher, the absolute number gets more and more powerful. So little food for thought in regards to that I think is very, very important. The second way that this Russell Wilson could continue to roll here is if we have a rotation from big dogs into small dogs. So talking about big cap stocks, big tech, if you see some selling action, some of those stocks, right, that have been tremendous performers for really the past 2 years. If we see some rotation out of some of those and into some of the more small caps, Russell type stocks, that's a potential that could happen there. Remember, you don't need a lot of selling from big tech to make absolutely monumental moves in the Russell, right? Because small cap stocks are so small in regards to their floats, in regards to the size of the market caps of those companies, that if you get some of that big money to come out and go into smalls, the small caps end up rolling way further up on a percentage basis than whatever the big techs went down. So you can see a big tech stock down 3% over a month and just people kind of slowly sell that one. But yet you can see a small cap stock up 30-40% in that same exact month, right? So if we get rotation, this will continue. Third thing is if we see sideline money come in heavy, right? There's a lot of sideline money out there. And if we see treasury yields fall over the next 6 to 12 months, that could put a lot of buying pressure into the market because people will stop looking at treasuries as much. And if suddenly you get hit with the FOMO of the market, which a lot of people don't feel FOMO in this market because everybody's expecting like we got to go lower here. No way, this can't continue. It's August, like August, September, bad months for the market. October, scary, election, blah, 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 right? If this market rolls into rate cut time, right? Rolls during this time that people are expecting things to be bad, and we see a situation where next thing you know, you're staying unemployment rate in the 4s. We got the Fed start cutting rates here. The market's doing great when no one expected to do great. You could actually get into a FOMO cycle, believe it or not, eventually, right? Which we don't really have that yet. Actually, we don't have that at all right now, in my personal opinion. If you look at the call buying activity out there, the put to call ratio, it's not really screaming like this is like, you know, everybody's got to jump in, it's FOMO time. It's not really saying that at all, just to be quite frank. So you never know. That's a potential, right? And remember, there's a lot of money over there. This is money market funds as of last quarter. Keep in mind that I almost guarantee you that number's significantly above that right now. So, you know, we're talking about $6.5 trillion roughly over there in money market funds. Keep in mind, if we go back 3 years ago, we were at about $5 trillion. 2 years ago, we were about $5.1 trillion. A year ago, we were at close to $6 trillion, a little under 6, let's call it high $5 trillion. Now we're at about 6.5, if not 6.6. The number just keeps going up and up and up. And I wouldn't be surprised if that number peaks here in the next 3 to 6 months and you actually see some folks saying, you know what, let's rotate. And then the question is, what do you rotate into? If you feel like big tech's kind of already had a lot of its move and you want to rotate to something that you see as having the next move, you might rotate some of that money into small caps, right? And you rotate some of that money into small caps, woo, could you be talking about another leg higher there, right? So that's a little food for thought. And that's another reason why the market might have a little bit of a floor underneath it right now, right? Despite all the stuff that's going on out there, is just, I mean, there's just a lot of money over there, like a crazy amount of money. Sitting over there that people are just like, when's it coming in? Now, keep in mind, in my personal opinion, people are expecting like $3 trillion to come over. No. But could we see $1 trillion come over a 12 to 18 month span? I think that's a potential. That's what we're talking about there, right? Cheesecake. This is, I took these pictures, I think it was either yesterday or the day before. I posted them in the private stock group, right? I said, new flower child, North Italia, being built in Henderson, Nevada. Should open this winter, in my opinion. What is this? Came seems to be, So basically what they're doing is they're opening a lot of these Flower Childs and North Italias right next to each other, I've noticed. And I noticed that here in Vegas. I also noticed that in Phoenix. And it's actually a pretty smart strategy. And they kind of like bring a lot of traffic right to a new area, and by building them right close to each other, because both of them do big volumes of people. And you know what's interesting is if you look at Chipotle, like why has Chipotle been such a great stock over time, right? Obviously, they had a great just overall business model, right? And back in the day, their food was such high quality. It was like amazing. It's not as high quality now. It's still like good compared to most places, but let's be honest, like back in the day was special. Chipotle 10 years ago, you guys don't know about 10 years ago, 15 years ago, Chipotle, that was special back then. But why has Chipotle stock done so great? There's a few core reasons why the stock's been such a tremendous performer, and this is why it leads into where Cheesecake's headed with the Flower Child concept. The reason is Chipotle can open small locations. Now, when you open small locations, you can put them a lot more places, right? Think about Starbucks also. Another great example of small locations. You can fit them in places that, honestly, you wouldn't be able to fit a large Cheesecake Factory, let's say, restaurant, right? Cheesecake Factory needs a huge amount of land. It needs a huge building, right? Chipotle, small locations, very small locations, doesn't cost a lot to build those locations out either. High margin products, high margins, streamlined. If you think about their products, I mean, very streamlined. Chipotle, you can get a bowl a ton of different ways, but at the end of the day, you're only picking from a few different options, right, to make that combination. So it's a very streamlined business, and it reminds me a lot of Flower Child, because when you go to Flower Child, I see a lot of the same glimpses. It's not quite the same ordering where it's like, I want rice, I want beans, right? But it's very similar in terms of you look at the menu, you say you want this or want that, right? And you got a few options. You can get chicken, you can get steak, you can get salmon, you can get shrimp, or you can just have your meal like vegetarian style. And so it reminds me a lot of Chipotle. And I'm looking at the size of this location they're building here in Henderson. It's not a huge location, but I would almost guarantee you they're going to do crazy volume out of there. Crazy to-go business. Crazy to-go business. I bet you that inside's going to be packed the majority of the time, and so, but it's a small location, and so I think that concept is going to evolve like a little miniature Chipotle is kind of what I'm thinking here. Now you may say, how do I feel comfortable buying a stock like Cheesecake? Because this is one of my favorite stocks I've been buying here over this year, and honestly, I would love to keep buying Cheesecake for the next year or two. You might say, how can I feel comfortable with that? All the recession worries out there. What if we have the big unemployment cycle in the next year or two? Like, oh my gosh, Cheesecake, not good, right? I feel very comfortable. If we look at Chipotle, Cheesecake, before they own North Italia and Flower Child and all these new great concepts that are going to perform tremendous regardless of kind of the market, just back when it was only Cheesecake Factory, look at the net income this company produced, even in what would be considered very bad economic years, right? $42 million of net income, $81 million in net income, $95 million in net income, $98 million. And that was when they just owned Cheesecake Factory. And that was super high unemployment rates back then, right? And not a good economy. And yet Cheesecake still put up those numbers. This was before food delivery was a big thing and all that stuff, right? So this is food for thought, no pun intended. And that's how I feel so comfortable buying a stock like Cheesecake. Another reason is I'm not scared about a recession in regards to Cheesecake. One, they've proven before they can still make great money even in a recession, right? Two, guess what? If you do actually have a recession, guess what's going to become a lot cheaper? And keep in mind, there's two concepts that they're going to build out in mass over this next 10 years. One's North Italia, the other's Flower Child, right? Both, in my opinion, are going to 200 plus locations. So if not Flower Child, maybe it might go to 500 long term. We'll see, right? If you have a recession, land gets cheaper. It's beautiful. Building gets cheaper in a recession. Workers are readily available in a recession, right? Because you could have a lot of layoffs. And so guess what? All of a sudden workers are very available. And guess what? You also get your permits faster. One of the things that's actually held back Cheesecake from opening more locations over the past year or so is permits. Like getting the state, getting the local government to get our permits and get this thing built, because there's been so much building going on, right? If suddenly you have a major slowdown, then the state starts to look and say, we got to start approving stuff faster. We got to get these permits out there, right? So recession, it doesn't scare me with the stock like that. Like, okay, let's say their comp store restaurant sales go negative in the short term. Is it going to stay that way? No, it never does, right? You come out of the recession, then all of a sudden your comp restaurant sales go crazy over the next few years. And meanwhile, you're able to pick up land for cheaper, build a bunch more locations, workers are available, permits are better. That doesn't scare me at all, just to be quite frank, right? If anything, if anything that scares me in regards to Cheesecake, it would be like some huge new inflation cycle where everything went crazy in terms of price again. But the only way you're going to get that is to get the same dynamic to happen that happened back in 2020, 2021. Massive stimulus, all types of supply chain disruptions, right? Government shutdowns, and just, a whole crazy situation. So it's just unrealistic to see that again. And, as Chet told me a long time ago back in the day when I worked at Quick Trip, he said, you never waste a recession. Never waste a recession, right? And Quick Trip was always in the business of buying land, building more and more locations. Never waste a recession. So that's how I feel comfortable. That's how I feel comfortable with a stock like that. Speaking about comfort, PayPal, baby. We're starting to roll on PayPal. Up $4,500 here today. Up 11.11%. Hey, that's a great sign. So hit $21,000 up in regards to PayPal. This is beautiful. This is beautiful. Check out this chart. Look at this chart. The 1 month chart. PayPal's actually running its own race, and it is so good to see. It's so good to see. If we look at the past month, PayPal stock's up about 16.5%. The S&P 500's up 1% in the past month. The Nasdaq's basically flat in the past month. This is ideal. I mean, no, take into consideration, what if the S&P 500 in the past month, what if it was up 3%? What if it was up 4% in the past month? Like how much would PayPal be up in that situation? So the fact that this stock's starting to run its own race means to me that investors are starting to view PayPal as a special story stock and the type of stock you want to position into. If this stock was only, like let's say it was only up 1% in the past month, I'd be like, okay, Wall Street doesn't see it, right? It's clear as day, Wall Street's starting to understand this story. They're starting to understand the stock. They're starting to understand what Alex Chris has going on, his running of the business. And that's why the stock just continues to go up and up and up, despite these indexes not really doing great here recently, right? And so if these indexes do kick into gear, right, imagine what PayPal's going to do in that situation. You'll see PayPal $80, $90 quick in regards to that. So this is beautiful to see PayPal start, and this should have happened a while ago, but it took a while for Wall Street to really come around to what's going on here with PayPal. Now, keep in mind, in regards to PayPal, I think it's going to get a lot more fun over the next 12 months, especially if we don't have a recession. If we don't have that big unemployment cycle in this next year, PayPal's going to get a lot more fun, right? Because rates are coming down, that's going to be seen as very favorable to all the fintech companies. And PayPal obviously gets put in the fintech category, right? So that's going to be a huge boost for its stock price. Additionally, the more its stock price goes up, the more these bearish analysts that have these very bearish prices are going to have to bring up those price targets, right? They're going to get more constructive on the stock as well, right? Which means they could go from a hold on the stock to a buy, or a buy to a strong buy, those sorts of things, or from a sell to a hold, which is going to be very positive for the stock as well. Then if Alex Chris and the team come in with great numbers again when they report, which they probably won't report earnings again until, I would say, either October or November. Whew. I mean, could you see the stock at $100 before the year end? I don't know. We'll see. But Don't take it out of the realm of possibility, because this is a divergent story now at this point in time. Speaking about divergent stories, Palantir. Oh my gosh. Palantir. This stock, it can't stop going up. It can't stop going up. It's unbelievable. We're now up 267% on the stock. I mean, this is that stage I start wishing I owned more shares of the stock. I just do. I start wishing I own more shares, and I do own more Palantir shares than this. This is just in a public account, but still, like, I wish I had even a bigger position. But we got to remember, before we go on to what's going to happen with Palantir from here, right? We got to remember that Palantir was scary days. If we go back 2.5 years ago, there was a lot to be worried about in regards to Palantir. The growth rates kept getting worse. They were losing money back then. It was an ugly story. The margins weren't impressive. They didn't really have any excitement around the business model, and all that changed. The margins have obviously increased massively. Growth came back in a massive way. They flipped to profitability, and they're just getting more and more profitable. They're starting to become an ATM machine of a company, right? Obviously, there's an insane amount of hype in regards to their specific products and where they fit in the marketplace, which, is still very early days. Remember, AIP was just launched last year. Like, think about where AIP is going to be. Think about where Foundry is going to be. 2 years from now, 4 years from now, 6 years from now. Also, remember, a company like Palantir, they're always investing in their business. They're going to come out with new future products and services that we don't even see today. That could be the next AIP after that, right? The next huge whatever. It's a very special DNA at that company. They got one of the most talented, one of the things that gave me conviction around Palantir back in the day, other than the balance sheet, is actually their workforce. And I'm not just talking about Alex Karp. I'm talking about their actual workforce. And I heard from a lot of people that were inside the industry that said, getting hired at Palantir, much more difficult than getting hired at Google or Meta or a lot of the other big tech companies. Like, you get hired at those places a lot easier than getting hired at Palantir. And Palantir was like a level above. And so they got a special group over there. And remember, your company is your workforce, right? And so as they continue to build that sales force out and get that better and better, can you imagine where this company's growth is going to be 2 years from now, 5 years from now, 10 years from now, versus where it is today? Because Palantir focused so much of their attention for the longest time really just on like engineers, the type of folks that will build the products, rather than the folks that will sell the products, right? And Palantir now can focus a lot more on not just building the products, but selling the products. And so that's a beautiful thing. They got the relationship with Microsoft now. I mean, just there's so much going on with Palantir, it's impossible to keep track of it all. And so this is a very special stock. And here's a 2-year chart of Palantir versus S&P 500. Palantir's up over 300%, S&P 500 up 35% over the past 2 years. So keep in mind, Palantir's nearly 10x S&P 500 returns, right? And I'll just say this. This is why we love stock picking right here. This is why we absolutely love it. And this is why I listen to conference calls on 1000x.com at 2 a.m. Because when you find these sorts of stocks and you find these sorts of opportunities and you make the money, right, it is a great feeling. And it's a great amount of money, right? Like we're talking about, you can completely change your return profiles, which can completely change your financial life. When you're talking about completely changing your financial life because you change your return profile, you could be talking about driving different cars, living in different homes, your kids go to school at different places, right? You're able to go to different types of restaurants and other folks. You're able to go on vacations that, you wouldn't be able to go on otherwise. You're able to live life more on your own terms. You could retire early. Like, there's an immense amount of opportunities. That's why we do this. A lot of people don't get it. Like, why wouldn't you just buy an S&P 500 index fund? Why stay up late, listen to conference calls? Why put in the work researching stocks? Why do this? Why do you think an NFL player's willing to get his head bashed in? Going over the middle and get smashed? Because the money's really good. That's why I'm willing to stay up to 2 a.m. listening to a conference call. Because the money's really good. It's really freaking good, okay? And so it's important you understand that. It pays different. You live a different type of lifestyle, right? So, why is an Olympian willing to dedicate their whole life to this thing that I'm going to do, right? Why is LeBron James dedicated his whole life to playing basketball? Well, he probably loves playing basketball, but I'm sure he also likes making $40 million a year or whatever he gets to play basketball, right? Like, come on, man. And so when you go to the Cheesecake Factory, you could drive this or you could drive this. Both are going to get you there, right? Or should get you there. But one's just a little bit more fun than the other, right? I mean, if I had to pick, I think I'm picking this one. And I think you are too, okay? If we're just going to be honest, can we be honest with each other for a moment? And then after your date, you can pull up to this house, you can pull up to the 1-bedroom, or you can pull up to, the basement with your mom's house or whatever. It's up to you. We all have choices in life. That's the beautiful thing about life. We all have choices. You pick your choices. Speaking about picking choices, AMD had some choices to make, and they made a big choice. $5 billion acquisition of ZT Systems. Now, I want to hear Lisa Su specifically talk about this deal, and she went on CNBC, so I had to watch on TV, maybe a couple hours ago or so, and she was speaking about the deal, and basically this is going to allow, because you're going to understand, NVIDIA has it all. NVIDIA can put the whole thing together for you, the whole show, from the hardware side to the software side, the whole thing. And AMD's realized more and more, and Lisa Su's realized, if you're going to really compete with NVIDIA for the next decade, you better offer everything. You better have the hardware, the software, the systems, the connections, everything, right? It goes back to their acquisition of Xilinx and all that sort of stuff, right? And so she's now positioning AMD to really compete with NVIDIA over the long term. Now, is this something that's going to hurt NVIDIA's numbers in the next, let's just call it for the remainder of this year? No. No way. Is this something that's going to hurt NVIDIA's numbers in 2025? No. No way. Is this something that could start having an impact on NVIDIA in 2026? Yes. Is this something that could have a more substantial impact in 2027, 2028, 2029? Yes. Okay. So keep in mind, this deal does not mean the demise of NVIDIA or the demise of NVIDIA stock. You could still see NVIDIA this year go to 150, 200. It's a possibility this year. Okay. But in terms of NVIDIA, we're going to stack up some problems here that are going to really start to emerge in 2026 and beyond. And so that's probably going to hold the stock back in 25, 26, and in future years, just to be quite frank, because you're going to stack on, a lot of pull forward of demand in 24, 25, 23, right? That could hurt 26, 27. And then additionally, with AMD becoming what will be seen as an actual competitor, because I don't think up until now AMD's been considered like a serious competitor to NVIDIA. They just haven't, not on the AI side, not on the data center side. But I believe Lisa Su and AMD, they're positioning AMD to actually be a serious competitor in 2026, 2027, and beyond, right? And Lisa Su has a great history of doing this. She'll position the company, a year or two, and it takes kind of a while to put all the pieces together, and then it positions a company great for the next 5-10 years. She's done that ever since she got hired as CEO back in, 2014. And so bullish for AMD, but not necessarily for the short-term AMD, more for the longer term of AMD. And I don't want to say it's bearish for NVIDIA, but it's toward the bearish side for NVIDIA long-term, right? Which I'm talking 2026 and beyond as far as that goes. Now, that leads me to talk about Estée Lauder. So, I got scared. I'm not going to lie to you guys. I got scared. Because this is a stock I just started buying. This is their first earnings report since I started buying it. It's a stock I want to buy a lot of shares of. And all of a sudden, I open up the earnings report, and a lot of times my eyes just automatically go down the bottom line right off the bat. And so my eyes just went there, my little artificial intelligence brain just, and I went, what? 79-cent loss versus 9 cents? I said, net loss of 289 or 286 million? I'm like, what? No way. Things are that bad at Estée? I might be screwed in this situation. I got so scared. But it pays to do a little deeper digging, okay? So here's what we actually have going on here. Net sales, so revenue was up 7% for the company year over year. Good. This is a company that revenues had been going down. So the fact that we can, and if you look at the year end, right, revenues are down 2%. So now that they're up 7%, that means the revenue story in regards to Estée is starting to get stronger. Let's freaking go, baby, okay? Cost of sales down 6%. The holy grail. The holy grail. If you can talk about your revenues up 7% and your cost of sales down 6%, gross profit's going flying, right? Sure enough, gross profit up 14% year over year. Gross margin went to 71.8% from 67.8%. This is phenomenal. As of right now, this is like a grade A income statement. But then we have problems, okay? So selling general administrative, they kept that in check. That was only up like nothing, basically, like hardly nothing, right? So as of right now, even to this line, even all the way down to SG&A, we got a grade A income statement, not an A plus, not enough growth for an A plus, but this is grade A, right? But then we run into a bunch of problems. They have restructuring other charges that was 96 million versus 31 million. They had a goodwill impairment of $291 million. These are like non-cash expenses essentially, right? Impairment of other intangible assets of $180 million. That's what killed their profitability right there. So it made their operating expenses look like it went insane, up 23%. But these are like one-offs. Goodwill impairment of other intangible assets. This is like more one-off type non-cash expenses. I'm not even worried about that. So overall, I had to give the income statement a D. But let me be quite clear. If it wasn't for these little one-offs here, and they weren't little. They were huge one-offs, right? Because, this would have been a grade A income statement because the net income would have been up insane, right? Because this 290 plus 180... that's, what is that? That's $470 million, right? My math right there? 470? Yeah, it should be like $470 million. So, and there's also this restructuring and other charges here. That was another 50. So we're talking, it's over $500 million in basically more like one-offs, right? $500 million. So keep in mind, this net income would have been, I mean, it would have been insanely in the positive. Let's just call it that. It would have been insanely, it would have been hundreds of millions of dollars in the positive. But instead, it looks really bad, right? So, the moral of the story in regards to Estée, things are actually on the right track in a massive, massive way. And this bodes very well for Estée. Very, very well. And so the way I look at the stock is this is a buy under 120. It's 92 bucks here today. And I would say that it's an aggressive buy under 100. So that's kind of my view. So as long as the stock's under 100, I'm going to be aggressively buying as many shares as possible. I still have to listen to a conference call, likely tonight or tomorrow, and I'll make sure everything's good there, but I can tell you I'm going to likely be aggressively buying this stock. Now, China is weak for the company. So it is something to kind of keep in mind here. China is weak for the company, which doesn't come as a surprise. I mean, we've just been hearing a lot of weakness out of China from a lot of companies. So it's not like it's Estée specific. We just something continuing on. If the Chinese economy gets stronger, man, this is going to be a lot of fun for a lot of stocks, and especially a stock like Estée Lauder. Appreciate you guys joining me as always. Thank you so much for being here. If you're looking to apply, join my private stock group, wealth group, get access to thousandxstocks.com, become a much better investor than where you're at here today, get serious about scaling up your portfolio, get around like-minded individuals who love to invest, then click the pin comment down there. You can apply to join us in there, and we can see if we can get you in there maybe a little later on this week. Much love and have a great day.